This video is going to be on framing a daily bias and understanding a weekly open high low close or open low high close candle. So the basis of a weekly profile is based on what you see right here. This is a weekly candle on the left hand side. It's a open low high close. So this makes a bullish weekly candle. And when you break it down into a daily chart to go ahead and look for a weekly profile, you can see exactly how this weekly candle is formed through these 5 daily candles right here. The daily candle opens up right here along with the weekly, and this daily manipulates lower to put in the low of this open low high close, and then we distribute higher to put in the high of the open low high close. And then finally, the daily candle closes to put in the close of the open low high close. Obviously, this scenario would be vice versa for a bearish scenario. Instead of open low high close, we would go open high low close. But to understand how a weekly profile is actually formed, we need to understand the entire context, and this diagram right here shows you exactly how a weekly profile is formed. So I'm going to go over 3 weekly profiles that I've found are the best as far as trading conditions. These are the most volatile, but also the most predictable weekly profiles that can form. The first one is the classic expansion week. This is when the Monday opens and the Tuesday candle manipulates lower. Wednesday through Thursday, we distribute or expand higher, and Friday is the return into the range. Here we can see a classic expansion. We open up our Monday candle right here. Our Monday candle is red. This is our accumulation stage. The Tuesday candle immediately breaks Monday's low. This is our manipulation move, and this is where we start our market maker buy model towards the upside, targeting the Monday high. Wednesday and Thursday, we get a nice expansion move higher, and Friday is the return to the range, and this is the weekly candle that we form after this trading session is over. Here's an example live on the chart of a weekly profile playing out. We can see right here on the Monday candle, we manipulate lower into this low right here. We go ahead and break this low. This is our manipulation move. And then we expand for the rest of the week. Whenever we have a reaction like this off of a higher time frame chart level, you'll notice that most of the times the weekly profile is just straight bullish. Like this situation here, we never broke a low, and we actually ended up putting in the low of the week on Monday's candle. Next profile we have is a consolidation / reversal. This is when we see accumulation through Monday and Wednesday, mostly because there's probably no news. And then we see the break out of the range on Thursday, which acts as our manipulation move. This candle ends up being an open low high close. And then the following day on Friday, we continue to expand higher. This is the consolidation reversal profile seen broken down. We have Monday, Tuesday, Wednesday, which for the most part stay in between each other's ranges. Finally, the Thursday breaks Wednesday's low. In this case, we did not put in the low of the week. We only broke Wednesday's low, but it's important to note that a low of the previous day was broken. And then we set off market maker buy model, and you can see this candle closes open, low, high, close. And the following candle on Thursday does the same thing. We get an open, low, high, close. So this is the consolidation / reversal profile broken down. And then finally, we have the midweek reversal. This is the last profile that I'll be talking about here. This is when Monday and Tuesday accumulate because we have no news either of these days. Wednesday puts in the low of the week as our manipulation move. This is when we have a high impact news driver. And then Thursday and Friday, we expand higher to finish the week as an open, low, high close candle. Here we can see the midweek reversal profile in play. We can see this Monday and Tuesday candle accumulate because we had no news either of these days. The Wednesday candle breaks the previous week high on a high impact news driver, manipulates higher, and makes an open, high, low close candle. The following day on Thursday, we do the same thing. We get an open, high, low close, and Friday is another consolidation day. Now, one of the most important parts of framing a weekly profile is going to be the economic calendar. So let's break down how exactly we use the economic calendar. So the first rule is that we do not trade Mondays, regardless of if there's a high impact news event or not. In this case, we see that there is no high impact news event on Monday, so we avoid the Monday trading day, as this is where we expect accumulation. The high impact news drivers that we want to focus on are the ones at 8:30 in the morning. So if we take this economic calendar here, we can assume that Monday will be an accumulation day. Tuesday, we can see we have an 8:30 a.m. high impact news driver, so we will anticipate a manipulation move here. Wednesday, we have another 8:30 a.m. high impact news driver, so we can expect some expansion. Thursday, we can expect further expansion because, again, we have news at 8:30 in the morning. Friday, we do have a high impact news event, but it is at 10 a.m., so it does not hold as much weight as the 8:30 news drops. Now, if we take this weekly profile as a whole, we can anticipate before the week even opens that this will be a classic expansion like the weekly profile that we just went over, where Monday accumulates, Tuesday puts in the low of the week, Wednesday and Thursday expand higher, and Friday is the return into the range. It's important to note where this first 8:30 a.m. news driver goes, because this will be our manipulation for the week. The other news driver that we consider high impact is going to be the FOMC news at 2 p.m. So if we take this weekly economic calendar right here, we can see that we have high impact news on Tuesday. We have high impact news on Wednesday, not only at 8:30, but also the FOMC meeting at 2. We have high impact news on Thursday, and we also have high impact news on Friday. On the other hand, if we take this economic calendar right here, see that we only have tradable high impact news on Thursday because this is the first 8:30 a.m. news release. The rest of these are at 8:15 and 10 a.m. and Friday, as we have another 8:30 a.m. news release. Moving on to another example we see here on this economic calendar, we have no news on Monday, and we also do not consider Monday a trading day, so this will not be a tradable day. Moving forward to the next day, we have high impact news at 10 a.m., but it's important to note that this is not at 8:30, so Tuesday is not a trading day. On Wednesday, we have a news drop at 8:30, so Wednesday becomes our first trading day of this week. Following day, we have news at 8:30. Again, this is another trading day of this week. And on Friday, we have no news drop at 8:30, so this is another day that is not considered a trading day. So just to recap our set of rules really quick, our executions. First rule is that there are no Mondays that we trade, and most of the time this lines up because we usually do not have a high impact news driver on a Monday. We also don't trade Mondays because there's no data for the week to anticipate any weekly profile. Now, there is one exception to this, and that is if Monday pulls into a higher time frame PDRA, like a fair value gap or an order block, to set off a classic expansion week, like one of the first examples that we went over in this video. The next thing is we want to use high impact news drivers from our economic calendar to use as framework for the weekly profile. And then we want to define the higher time frame PDRAs on a 4-hour or above to determine the draw on liquidity or the objective. Now that we've went over our rules for execution, let's take them to an actual chart and watch this thing play out. This line here marks the weekly open, so this is the Monday that the week opens. Our first rule is that we want to avoid trading Mondays, so let's skip over to Tuesday's session. Now that Monday has traded, let's take a look at the economic calendar for this week to determine when we can take a trade. If we look at the economic calendar here, we can see that we also do not have any news on the following Tuesday, so we skip this Tuesday as well. So now we have Monday and Tuesday's trading sessions. Now we can look back at the economic calendar to see if we have any high impact news on Wednesday. On Wednesday, we do have high impact news, as you can see here, but it is only at 10 a.m. So Wednesday becomes another non-trading day. Now, if we look at the economic calendar, we have high impact news at 8:30 on Thursday. So Thursday becomes our first trading day of the week. And now that we have Monday through Wednesday session, the only thing left is to go to a 4-hour time frame or higher to determine where price bounces out of. Now, if we go to a 4-hour, the immediate PDRA that we can see here is this 4-hour order block. So taking into account the data that we have, we accumulated higher on Monday and Tuesday. Wednesday manipulates lower into a higher time frame PD array, you'll start to notice that this scenario here lines up with one of our weekly profiles, which is the midweek reversal. So we can anticipate the following day to be a open, low, high close candle. This brings me to the final step of a weekly profile framework, which is your change in state of delivery or an order block. The three things that define a change in state of delivery is time, price, and a close. In this example, you'll see right here, you'll see the time aspect is the day of week. And the close aspect is we need a close below the change in state of delivery candle. This means that the candle or group of candles that manipulated higher have to get closed below, or the candle that manipulates lower has to get closed above. This confirms our change in state of delivery. Now we can look back at our chart example after knowing all of our rules that we need, and we are now looking for a change in state of delivery. This is a 15-minute time frame, but ideally I would look for change in state of delivery on a 30-minute or a 1 hour. But when neither of those time frames are clear, we can drop down to a lower time frame like a 15-minute. Now we can clearly see that within this range, this is going to be our change in state of delivery candle right here. Once price closes above it, will be our confirmation of a change in state of delivery. So we'll fast forward to see when exactly price closes above. And this is where price closes above it, and this becomes your entry long. To complete this weekly profile, obviously we want to see a move above Monday and Tuesday's highs, so that's what we will target right here. Our stop loss goes below Wednesday's close, and now we can see how this trade plays out. After 2 days, this trade finally completes and reaches the highs that we were initially targeting, thus completing this weekly profile as a midweek reversal.